Hello, everyone. I am glad to be here and to be talking to you about US taxes today. I am Milena Poetakov. Let me make this a little bit bigger. I am an enrolled agent qualified to represent clients before the IRS and a chartered certified accountant. I'm also the senior tax manager at MyExpatTaxes. I will tell you more about MyExpatTaxes and what we do, what we could do for you a little bit later and as I speak. What are we going to be speaking about today? I will start with some specifics that will be targeted to overview what is Fulbright income and how it relates to the US citizenship-based taxation, what income is taxable, what is income, how to report, what to report, when, those things. And then I will continue to tell you a little bit more about how US taxes needs to be filed in general, what are the most important things to not forget about, and probably you have heard about the so-called FEIE and FATCA. If not, I will tell you a little bit more what those are and why they are relevant to you. So, what about a Fulbright? The Fulbright perspective and what you might be facing is a little tricky, I have to confess, because the grants are subject to US income taxes, but there is no body, so to say, that has the requirement to issue you a standard US tax form. A standard US tax form would be Form 1099 or W-2. If you have been employed in the US, those might sound familiar, or if you have been self-employed. And there is no one to withhold taxes for you from your grant, scholarship, fellowship payments. You have to figure this out yourself. On the other hand, the IRS tells us that amounts paid to US citizens or residents, I'm saying residents because the same rules are valid for US residents or green card holders, who and those of you who are lecturing or teaching abroad, these payments represent compensation for services and are treated the same as wages for everybody else, so they have to be included in gross income. What this means to you, again, you don't have sorted and well-organized documentation. You will need to figure out what your gross income is, and I'm gonna help you with that. Just a little patience. Probably you already know, or at least you know what your payment, what type of payment you are receiving. Is this a scholarship or fellowship income? These are typical for students and researchers. Is this compensation for personnel services? Or I'm gonna, for the purposes of this presentation and discussion, I will put an equal sign to those as salaries. So if this is in exchange for services, it's the same as salary, just to make it very clear. This is typical for mostly for teaching assistants. And again, I cannot stress enough that this is the same as a salary. The scholarship and fellowship grants can be tax-free, yes, because but there are some conditions that have to be met, and those two conditions are you must be a candidate for a degree at an educational institutions. That's a qualifying institution. What is a qualifying institution? The definition is relatively broad for purposes of treating scholarships as taxable or not. It must be an institution that maintains a regular faculty and curriculum and normally has an enrolled body of students in attendance at the place where it carries on its educational activities. Basically, almost every university abroad, probably, and in the US. If you are a candidate for a degree, and in addition to that, the amounts you receive must be used to pay for tuition and fees required for enrollment or attendance at the institution. For just the tuition, the fees, books, supplies, and equipment required for all students. That's very important. That's why I stress on it. At the educational institution or required by the program. So this must not be optional. This must be really, really there. You cannot get away. Those fees must be paid by everyone. But some expenses, surprisingly, the DRS doesn't consider to be required, although any reasonable person would think so, that you have to live somewhere, travel maybe, but unfortunately DRS considers those expenses for room and board, travel as optional. Don't ask me why. And all amounts that are payments for teaching, research, or services, again, are as a condition for receiving the scholarship or grant, are considered to be wages, so they are taxable. Once again, to make the distinction, tax-free if you are a candidate for a degree, and the part of the scholarship that's paying for tuition, books, supplies, mandatory equipment is tax-free. Everything else, we can say, is taxable. I would like to make one note here. Tax-free does not mean you don't have to report it. This is something that we will discuss a little bit later. Tax-free does not mean not reportable. You might still need or want to report your taxes. And now to one of the questions that I'm receiving very often from US citizens who live abroad. Do I have to report my income if I receive it from a foreign educational institution or a foreign employer or a foreign bank? Yes, all income earned in the US or abroad needs to be reported, regardless of who and where the payer is. That really doesn't matter. And what is income? Income is the gross amount before any taxes, deduction, and expenses. Those might be taken into consideration later, but the starting number you always have to look at is the gross income before any deductions. For which period? The US tax year is the calendar year, so the period between January 1st and December 31st. How do you report your income on your US tax return? I'm gonna tell you a little bit about that if you want to do it on your own or with some self-prepared software. You have to generally report taxable scholarships and grants as wages. And the most typical situation for people who receive scholarships and grants especially in the first or last year they live abroad. Very often you don't pay too much income tax in the foreign country where you reside. So this prevents you from using the foreign tax credit, and probably most of you will benefit from using the foreign income exclusion. What those two are and how we use them to minimize and optimize taxes for US citizens abroad, I'm going to tell you a little bit more in a bit. Again, what is the challenge for you usually is to make sure that you realize and understand that you have to report all income as you are in the US. It doesn't really matter that you are abroad. The citizenship-based taxation means that wherever you go, the US taxation regime will follow you, and you have to report all income regardless of where it comes from. To use the foreign income exclusion, one of those very nice, generous expat benefits from the IRS, you probably have to consider the fact that you have to generally be at least abroad for 330 full days. You don't have to be necessarily abroad for 330 full days in the calendar year, but those 333 days must be in 12 consecutive months, and at least a part of those days must fall into the calendar year for which you will be filing your taxes. So, for example, now in 2024, you'll be filing for 2023 tax year. There are questions I have already received about state taxes. You might need to file state taxes or not, especially if you moved in the same year. You have lived for a part of the year in a state that imposes income taxes. In the US, and you have enough income, then probably for sure you have to file at least this particular year as a part-year resident. Sometimes you have to continue filing. I will tell you more again later. This generous expat tax benefit, the foreign income exclusion that some of you might be familiar with, have two conditions. You have two tests that you have to meet if you want to use it. Either the one that's not described here in the presentation is the bona fide test, which might be relevant, but you have to have spent at least one full calendar year abroad. If this is not the case, then this is the so-called physical presence test. It requires you to be 330 full days physically present in the US in 12 consecutive months. So you have to, what you have to watch out for to not exceed and not spend more than 36 days in any 12 months you roll over. And there are some examples. If you struggle to get your head around this, we can I will tell you a little bit later where you can find us later for more questions. But for example, what this strange 12 months consecutive month mean, for example, if you moved abroad in 2023 with in September, you can file and use this exclusion, but you have to wait until next almost September, let's say, to do that, to qualify. That's possible. You can just file an extension, and it is really something that can be done, and many people don't know it and don't use it. So just be mindful of how much time, especially at once you spend in the US, because it might disqualify you for just a few days. The exclusion is used for earned income. What means earned income? Salary. If your grant or fellowship scholarship is considered a salary, then it qualifies. Or self-employment income. This means something you are working for with your own effort. It's not passive income, or it's not pension income. Those are not earned income per the IRS definition. And now I'll be moving on to more universal rules that are valid for everyone, and so definitely for you. Again, there is no distinction between foreign and US income when you have to file your taxes, every single one. There is, if you wonder what it is on the left hand side, this is a small screenshot of a US passport, and if you open it, you will be able to find it. It says US citizen needs to file their worldwide income. What are the filing thresholds? That's always a very popular question, and it's not so complicated, but it's not super straightforward. So I cannot, because there are some questions I already received. I only received 2,000 US dollars scholarship or something. Do I need to file? I don't know. If this is the only income you received really, and you are a single person and you don't have any other income, probably no, you don't have to. But why I'm saying I'm not sure, I have to ask you more questions, because I will just draw your attention to two things here. This little table to the right represents the filing thresholds, and as you see, single persons almost 40,000, married filing jointly double that. But do you notice here married filing separately? If you are filing married filing separately, this is the tax filing status, and it is related to your family status. So if you are married, for example, to a non-resident alien, so foreign person, they do not have US passport, not green card holder, you don't want to draw them into this US citizenship based taxation regime, you will probably want to file married filing separately. And you can see that the married filing separately, tax filing status, the threshold is how much? $5. Almost nothing. So almost always you have to file taxes. That's why I cannot directly say to the person that asked me, should I? If you are single, yes. But if you are filing married separately, you have to file. The head of household is another tax filing status with a little bit higher threshold, qualifying widower. And I will mention a little bit more about the other one that has a relatively low threshold. It has nothing to do with any of the above filing statuses. You might be any of the above, single, married, anything. But if you are self-employed and you receive more than $400 in income, you will have to file a US tax return. That's why it's a little bit more than how much I received just in scholarships. The deadlines are, the general deadline for everyone is April 15. If you are living abroad as of this date, so in April 2024, if you have a foreign address, you can use the automatic extension for expats, which is June 17. But I want to stress on the fact that April 15 still remains the deadline for payments. So you can file your taxes later in June, But if you owe taxes, you still have to pay them by April 15th. And then the next question you will probably ask yourself, okay, well, but then if I don't file my taxes, how do I know how much I do owe? Unfortunately, I cannot give you an easy, direct answer to that. Usually, it's advisable if you will be filing your taxes with a, if you will be self-preparing or filing with a preparer, just start early before April so you can make some sort of a forecast estimation. If you cannot do that and you paid tax the prior year, maybe just make a conservative estimate, pay something. If you end up overpaying when you file taxes, you will receive a refund back. There is one more extension until October 15th. If you cannot make it until June 15th, it's 17th here just because it falls on a Saturday. And this is October 15th. But this October 15th deadline is very easy again to get, but it's not automatic. It's not automatic because there is a form that needs to be filed. If you file with MyExpatTaxes and you sign up before June 15th, 17th, it is available for free automatically for everyone. But you have to make sure to start your taxes, and just even if you cannot finalize, just start, pay for the preparation, and then finish later when you have all the documents or the energy to do this thing. But start it, because otherwise we don't know about you, that you want to file the taxes with us, and there is no way for us to file an extension for you. Or if you are going to file on your own, make sure to mail this form to the IRS before June 17th. If you file with us, you don't have to mail anything. This will be electronically submitted. So it's super easy. If you find out today that you should have filed taxes but you didn't, don't stress out. You're not alone. That happens, and the IRS knows it. And the IRS has created the so-called streamlined offshore procedure. It's an amnesty program that will give you a chance to catch up on your taxes. You just have to file for the 3 years that you are late and 6 years of FBARs. I'm gonna tell you a little bit more, and during the Q&A, if you are more interested about it. We do this automatically. We have a program that we file on a regular basis for our clients, and this is very important. The last point here on this slide: if you did not receive, for some reason, the stimulus payment, the coronavirus payments that were issued in 2020 and 2021, you have to hurry, because the deadline, the last chance to claim those for 2020 are now, up to June 15, 2024. So last call for those of you who didn't, because for whatever reason, because you did not file a tax return, you didn't know, or you think the check was lost somewhere. I don't know. Just maybe think about it. You have a chance to do it before you lose it. I got some questions, and this is a very regular question. Will I be double taxed? This sounds very unfair, that I have to pay taxes both in the foreign country and the US. Probably not, almost never, I would say. The direct short answer is no, you will not pay double. And you just have to file your taxes correctly in both countries. And there are a few ways that's achieved. How this is accomplished: when you file, normally when you are a tax resident in a foreign country, they will want you to file your taxes in the country and report your worldwide income as well in that same country. but you have to do the same in the US. When you file your US tax return, that's normally after you file your local taxes, but not necessarily. But let's say the normal situation is you already filed your taxes in the foreign country. What do you do when you prepare your US taxes? We do this automatically for you. You don't have to think about it too much, but you definitely need to be informed and know how this is done and what are your options, because all those options have specifics and implications on other deductions or benefits that you can use. The most popular one is, I already mentioned, it's the foreign earned income exclusion. It gives you the chance to exclude 120. It's a pretty generous exclusion of foreign earned income from US taxation. We have indicated here a little scale, how the level of difficulty, how difficult it is to use it. I will tell you why. This one is easy because it's relatively straightforward. Even if you want to do it on your own with a little bit of research, probably you can do it. There isn't too much calculation involved. You must have been at least 1 year calendar year abroad, or those 330 days I mentioned before. It is a great choice for people who did not pay too much for income tax, or for if you might have paid for income tax but you live in a country with lower income tax than the US income tax levels. Why it is not so great in some cases? Because if you have children, this will automatically disqualify you from using the additional child tax credit, which is refundable, and you can receive it even if you never paid a single dollar in US taxes. It limits your IRA contribution limits, and there are some specifics too. If you use it and then decide to not use it, but you can, this is considered a revocation, then there is a certain number of years that you cannot use it again. The next option is the foreign tax credit. The foreign tax credit means simply that the taxes you pay to the foreign country you will report your worldwide income on your US tax return, and you will receive, in the end, will come up with a figure of US tax due. That's very, very rough explanation, but and then we will take into account what you paid in the foreign country already for the same income, which will offset the US tax liability. In most cases, if you live in a country with higher than the US income tax rate, this will wipe completely all US tax liability. That's why I'm saying you do not pay twice, you just report twice. Usually you pay only once, and generally that's the higher of the two rates. If the US has a higher income tax rate, you will end up paying in the end the US tax rate. If it's the foreign, it will be the foreign, because this will net off your US tax, but you will not receive a refund from the US for foreign taxes paid. So it is great because you can use the additional child tax credit and receive additional funds from the DRS. You can contribute to an IRA, but it is very difficult. If you want to do it on your own, it's one of the most difficult forms too. It's difficult for us, not only for the general taxpayer. If you don't have software, it is almost impossible to get it right. I don't recommend it. Definitely, if you are ambitious and want to do it, and you have a relatively simple situation, go ahead, of course, do it. And the next option is to use the tax treaty, if there is such. The US has entered into tax treaty agreements with many countries, not all countries in the world, but most the countries in Europe. do have tax treaties with the US, again, I would say it's very difficult to use as a tax payer the tax treaties to exclude income, because it usually uses very financial and tax jargon. Those are very outdated, generally, frameworks that and there are multiple protocols and documents to follow. They contradict each other. It is a little messy, and the IRS is not helping you or us to follow those rules. So I would not recommend doing it on your own. But if you do it with us, again, you don't have to. We will be glad if you do. But if you come, you don't have to worry about making a choice which one is better. Exclusion, foreign tax credit, tax treaty, we do this automatically for everyone. We will choose the optimal one. If there is something specific, we'll make adjustments, we explain why, so etc. All the forms are included. Everything in 99% of the cases is e-filed, so it should be easy. That's our goal. Now, what is the FBAR and FATCA? In addition to the tax return that you have to file each year, there is the so-called Foreign Account Tax Compliance Act that is requiring you to report your foreign financial assets. What are foreign financial assets? All foreign bank accounts fall into this category, but not only. I will explain a little bit more about the thresholds and who needs to file, but in addition to bank accounts, you might have pension accounts or insurance policies. Again, these are financial brokerage accounts. All of those are financial accounts. But let's keep it simple. The bank accounts. If you have more than $10,000 cumulatively in the maximum balance at any point exceeded $10,000 in your foreign bank account, you will have to file an FBAR. What this means, to give you an example, it might be easier. For example, if you have a UK bank account, one, and you have £5,000 in it, and a second bank account with £6,000 in it, and there are dates. So the maximum value together is £11,000. You do exceed the threshold because it's cumulative for all of your bank accounts. You have to file it. Very often people will ask me, well, okay, I received a relatively significant amount of money in my bank account because I took a loan or I received my scholarship in my bank account. It only stayed there for a couple of days or even only for a couple of hours. Guess what? You still have to file an FBAR because it was the maximum value at any one point during the year. But you don't have to worry too much about it. I think this is one of the forms that are just creating an unnecessary stress to people, because it is really something you have to think about, and it's a separate report, but it doesn't have any implication on your bottom line. So there is no tax. It's just for information purposes. You have to disclose information about which bank, what's the bank account, the address of the bank, and the maximum value. Even if you cannot get it completely right, so where is 11,000 or 1,100? Make a conservative estimate. It does not affect your taxes in any way. So I would say, or many people will be sweating over, do I need to report this pension account or not? You know what? If you are hesitant, just report it. It doesn't harm you in any way. And there is the other report, FATCA. It is in fact part of your tax return, but it does. Again, I do not mention it because I think it's a little bit tricky, and probably nobody who will be preparing their own return alone will do it. So, but just for your information, if the maximum value in your accounts exceed 200,000, there is one additional form. Again, it's just for information purposes, but it is part of the tax return. Why I'm saying it's part of the tax return? Because the FBAR is not. The FBAR is not sent to the IRS, it's sent to the Financial Crimes Network. We do have the FBAR included for all of our clients for free, so it's not additional charge. Whatever support level you choose, it will be always there. You just have to report and gather some information about your bank accounts. And what else can we do? If again, it might take more time, but if you have relatively simple situation, it literally can take you between around 15 minutes or half an hour. That's not an exaggeration, it is realistic. I'm not saying that's in all cases. If you have more complicated situation, or if you want to use me or one of my colleagues to review your taxes, of course, I'm not available 24/7, so you have to wait for me. It will not be happening so fast. It will take some additional time for us to review your case, but the to use the software, it's very we hope intuitive, user friendly. The questionnaire leads you through the screens and prompts you for things that you might not have even thought about. Again, the FBAR and the FATCA forms are included for everyone. The extension forms are included for everyone. As soon as you come before June, just make sure, because then it will be too late to file an extension. And something else that it might be important for you, might not, I don't know. But again, we can e-file almost all returns. There are other services and preparers that or if you decide to use another one, of course, I'm not trying to force anyone, but maybe ask in advance, especially those of you that are married to foreign persons. If you are married filing separately, many other softwares do not have this ability to e-file tax returns for people who are filing separately. Just ask in advance if this is important for you, of course. And before I move to discussing some of your questions, I want to, because I probably won't be able to answer every single one of them. If you think that I missed something or I wasn't clear and you just think about something else, I encourage you to join our Facebook group. It's US Tax Support. It's free, it's very active. You don't have to be a client at all. It's open for everyone. Please join, and we do answer every single question there. Usually Natalie Goldstein, our founder herself, does that, so you will be taken care of in your questions. I will assume that June will be sending this recording, and you will be able to see there is a discount for you if you decide to use our services. It's not probably easy to copy and paste now, but you will have it. So you can use it if you want. And now I'm gonna move on to the questions. So I will start with one that asks, as a Fulbright grantee conducting independent research, how do I determine whether my grant falls under scholarship, fellowship income, or compensation for personal services for tax purposes? If you received it in exchange for services, so that was a condition that you provide services to receive it, then it is compensation. If you do receive it not for services, but it still does not fall, you're not pursuing a degree, again, it will be taxable. So I hope that is already clear from the slides, but if not, I'm gonna elaborate. How do I report my Fulbright grant income if it's paid in foreign currency, and what considerations should I take into account regarding currency conversion for tax purposes? If you use MyExpatTaxes, you will see there is a section in the software that is for scholarships or for wages, and you can always enter the original currency you received your payment in, and we will convert it for you at the average IRS exchange rate. The IRS does not have strict guidelines what exchange rate to use. You can use any exchange rate that is widely published. We use, it's recommended to use the IRS average exchange rate. If you Google IRS annual average exchange rates, you will find it. But if you use MyExpatTaxes, you can use the original currency. It will be done for you automatically. Next question. Is it advisable to submit the late tax return after returning to the US in July? Short answer, no, it's not advisable because you will be late. How dramatic this will be depends. If you don't owe taxes, maybe it's not such a big of an issue, but your record won't be, so to say, super clean. They will show that you were late, and next year when you might need to be late for a good reason, and you want to use one of the if you receive a penalty for late payment and you decide to call the IRS and to use one of the benefits that they will give you, if it's a first time incident, you can call them and they will waive the fee. Then you will not be able to do that because you were late last year, even though you did not owe taxes and you were not penalized. So we don't encourage you to do that. Instead, you can just file an extension. Just make sure that if you have to file beyond June 15th, you have to file a form. It's not automatic. Where can I find professional help when I file my taxes? Well, here I am. So I hope you do know already. MyExpatTaxes, how to find us. I will read another one. I worked in Texas for the first half of the year, then moved to Europe, but my permanent address is in California because my parents live there. Do I have to file in California even though I haven't lived or worked there in 2023? That's a little bit tricky question, but it might be interesting for you. That's why I decided to use it. So if you moved in the middle of the year from any state, by definition, you have to think, yes, I will have to file state tax return for at least half of the year. It's called part year resident return. But here's it, the person lived in Texas. So Texas doesn't have income taxes, so there is no income tax return due, but they have their address in California where the parents live. Now, the mere fact that you have a permanent address in California doesn't mean that you will be treated as a California resident. For state tax purposes, your intentions matter. So most of all, but you have to make some effort if you want to demonstrate that you moved out of the state to or move into a state, not just the address. So you have to register to vote, open a bank account, register a car in state, or you have where a place to live. So and usually voting in for there is a distinction, because if you just vote for federal elections, that's anybody can do this. And what is tricky, if you register for vote to state elections, that's a little bit maybe indication that you are intending to return to this state, and it will be very hard to claim that you are not a resident. You probably will need to file state tax return. But in this particular case, for this person, I would say no. You don't have to file in Texas, you don't have to file in California, because there is not enough indication that you were a resident in both. Next question. Please clarify the difference between what is considered income, what is considered living maintenance expenses, and how these may affect tax preparation. So, what is income? Income is everything that you receive as compensation for services, business income, passive income from investments, rental income, for example. What is not income is, for example, gifts or inheritance. There are usually some tricky parts to those, but it is not income. Living maintenance expenses, I don't know what do you mean here, unfortunately. The one is income, the living maintenance expenses are expenses. These are expenses. If you pay them yourself from your income, these are your expenses. Can you deduct those? In some cases, yes. In some cases, no. It depends what you are doing. Are you a self-employed person? Are those related to your freelance activity or not? For individuals that are not freelancers, usually living expenses are somewhat relevant. If you do itemized deductions, when you itemize deductions, if the standard deduction, there is a standard deduction for each tax filing status, is lower than what you can deduct as for medical expenses that are not reimbursed to you in other way. Mortgage interest usually can be used, and some donations, but usually the standard deduction exceeds those, because these are coming with limitations. I will read another one. How do we handle having multiple employers in Austria? For example, Fulbright Austria grant and University of Klagenfurt salary. Again, I cannot say for sure, but it seems that you did almost describe it yourself in a clause. Multiple employers implies that these are employers, so you provide services, though these are salaries. You will just add 2 employers if you use our software in the salary foreign compensation section, or if you do it yourself, just add together the 2 salaries, annual salaries, and this will be your gross income. Next is, if our net income for both 2023 and 24 are below 11,000, do we still need to file taxes? I think I already replied this one. It depends what tax filing status you are using, and are you freelancing. If 3 months of working for Fulbright was my only income for 2023, do I still need to file taxes in the US since I would have earned less than 13,000? Absolutely the same answer, because it's a very popular question. That's why I'm reading them, so all of them. Yes, and again, it depends. Tax filing status, is this the only income? If it is, if you are single, or merit filing jointly, no freelancing, you can skip filing unless you want to file because you didn't receive your stimulus check. Then you have to file because there is no other way to claim it. Even if you don't have to, if you want to claim a refund, you have to file. Next question, do we count the salary from November and December as part of a separate year's filing? You do have to report the income, as we said, from January to December. I have a Fulbright grant for study, master's degree in the Netherlands. Does it have to be reported? And if so, do I have to itemize what I have used the grant for? Yes, the grant needs to be reported. Again, the only situation where you don't have to, if this was your only income, less than 13,000, you were single and you did not have to file because you are not merit filing separately or a freelancer. You have to, do you have to itemize? If you will see there are relevant questions in our software. If you use the software, we will ask you what are those what is this grant used for? Because there are, as I mentioned in the beginning of the presentation, some expenses are qualified for tax-free treatment, and some are not qualifying. So if you have expenses for travel or for living expenses, those will have to be separate and taxable in any case. Another one, is there amount of time, 180 days, spent outside of the US, after which, in principle, US taxes do not need to be filed because of foreign residency? If so, what kind of documentation should they be filed instead to substantiate? No, there is no such amount of time. The time period you spend abroad might be relevant if you use the foreign income exclusion, but this suggests that you will be filing. You will always have to file. It doesn't really matter how much time you spend abroad. Following our Fulbright, if we would like to work for a US company remotely, what are the tax consequences for our companies or ourselves? Is there a way to minimize complication in this process? So if you work for a US company physically from a foreign country, that's no problem at all. You will receive a W-2 from the US company. They will withhold federal tax probably for you, and social security taxes. And when you file, it's important to indicate that you worked physically abroad. If you want to receive, to use one of the, it depends in which country you live. Let me see if I can see this. This is Austria. So if this is Austria has a higher income tax rate than the US. You probably will have to, not probably, you will have to report your US income, so income coming from a US company, to Austria, and Austria will tax it. But on the US tax return, you have to indicate that you worked physically from Austria, and then this means that you will be either using the foreign earned income exclusion or the foreign tax credit. Both should result in probably full refund if this is the only income you received from the US. The compensation income, so salaries, the sourcing of the income follows where you go. So if you are physically working, it doesn't matter who it pays you, whether it's a foreign company or a US company. If you physically work from Austria, this will be Austrian income. If you physically work from the US, Even if you work for an Austrian company, it will be considered US income. This matters for using the foreign tax credit and the foreign earned income exclusion. But it's a little bit complicated, I realize. So maybe if you want to know more, let's discuss it after. Or if you decide to use us, this is a very common situation for us. It's very easy to be handled. So to make sure that you will be optimizing your taxes and receive a refund if of the US taxes if you are in such situation. I live and work in Austria, but am not employed by an American company. Do I still to file taxes? I think we already replied that a few times, but it's important. Yes, you have to file. Will be double taxed on my Austrian salary? I am employed in an Austrian company. No, there is. There are very few. It is possible generally in very limited few situations to be double taxed, but this is almost impossible and almost never happens if you live in a country with the tax treaty and with income tax, especially if this income tax is exceeding the US income tax rates. So all of this that I already spoke about, I hope it now makes sense. But the US taxation, it sounds horrible. It does. It is troublesome because you have to take care of filing, but in the end, you don't have to be so worried and stressed because you almost never pay twice. If your taxes are prepared correctly, you just have to take into account a few specifics, and you will pay usually, yes, you will pay the higher rate, unfortunately, in most cases, except if you only have salary and if you use and you can use the foreign earned income exclusion, you may end up not paying any tax anywhere at all. If your salary is below 120,000, you pay zero taxes in the foreign country, but you qualify to use it. Nobody will ask you, did you pay taxes or not? You use the exclusion, you never pay tax in the foreign country. If you can, if you qualify, if you find a way, or in the US, it's a very generous exclusion and you can use it. This is not cheating. It's available for digital nomads and other people. It's the IRS that created the rules. They are available to anyone. Yes, there are specifics as to how to use it and who can use it, but once you qualify, it's. I'm gonna now, we have some more time. I will read a few questions from here, from the chat. I have two questions. The first is that I will be out of the US for more than 330 days. So I can file for an extension for me and my wife, who is in the US, and fill out my taxes when I return to get the exception. Second, so can I file for an exception? Yes, you can. Exactly what we discussed. If you think you will be abroad for 330 days in 12 consecutive months, absolutely it makes sense to file an extension so you can use the exclusion. Again, don't forget that in the tax year you'll be filing for, you can use the exclusion for the number of days that fall in this tax year. So don't expect that those full 330 days will be excluded, but the number of days you were abroad in the 2023 tax year will be excluded from, so the allocation of income will be excluded. Second, I get a stipend for food and lodging and also for scientific research, and then I get paid through my home university. Do I need to count both on my gross income? Yes. Another question. What exchange rate do we use? They forget to change. Again, the easiest is IRS average annual exchange rate. that there you cannot go wrong with that. I will not be abroad for more than 330 days, and so it don't fall under the FEIE. So what form do I need to use to properly report and account for my foreign income for 1040? If you paid foreign taxes, you will use foreign tax credit, and this is Form 1116. I don't know if this answers your question. I hope so. That was the same question. If you did not file, if you did not pay foreign taxes and you do not qualify for the foreign exclusion, I'm sorry to tell you that this income will be taxed in the US. If our grant payments are a fixed amount in US currency and just paid to us in whatever the conversion rate on that day was, can't we just use the fixed amount without any additional conversions? Definitely, yes, you can. Absolutely. That's okay. If the grant is for research and spent on research and not for a service for an employee, is it income? Yes, it is income. If it is something that is paid to you for, and it's not for a degree, you are failing the first condition. So it will be taxable. If we're living in Austria and not currently receiving or needing insurance and other social programs in the United States, our tax refund will be different or bigger. The fact that you are you're not insured, or you don't pay Social Security to Austria, does not give you any benefits, I would say. On the contrary, if you don't have coverage in the US, you don't have coverage anywhere in general. But for the US tax purposes, that's not something that will benefit you. If you are a self-employed person, for example, and if you pay Social Security taxes in Austria or in any other country that has an agreement with the US, these are most of the European countries, yes, this will be taken into account. So you generally have to pay only in one country, not both. But if you don't have, on the contrary, if you are a freelancer in this situation and you don't pay Social Security taxes in Austria, you will have to pay them to the US. So probably you're not self-employed. It would have been mentioned, I guess. Okay, well then, thank you, everyone. I hope it was helpful.